Good evening. This is Jack from Charting Markets, and this is the Bigger Picture webinar for the evening of Wednesday, the 12th of March. My disclaimer, I do this for educational purposes only. I'm here to share my technical analysis with you. I hope you can take some of what I'm doing and learn from it, transfer to your own charts. I'm not here to issue trading signals. Right, okay, it's been a really interesting week. And I've been talking about the tariffs for the last few webinars, and I would say, when I was saying late last year, this was going to be a revolutionary government in intention and not an evolutionary government, I was thinking that there would be a lot of disruption this year. But I have to say, I had rather underestimated it. Now, I did wonder when a lot of people were saying that you couldn't say Trump literally, and he didn't mean the stuff about tariffs, and it was just a negotiating position. I did wonder if that was true. And obviously, we've seen that that wasn't true, and actually, he meant every word. Now, we're now getting to phase two. Obviously, the trade disputes, stroke wars, are spreading beyond Mexico and Canada, and they're spreading over to some other big players. Japan has now been targeted. Everyone in Europe has now been targeted. Europe's putting on retaliatory tariffs, and that brings us to the second phase. Now, the second thing that Trump said, and a lot of people haven't been talking, well, actually, I haven't seen anybody talking about this, but it's something that I was looking at with great interest at the time, and it's something I'm really thinking about now. And the thing is, what Trump said was that in the event that anyone basically dared to put on retaliatory tariffs, then he would put on retaliatory tariffs against those retaliatory tariffs. And if they did it again, he'd do it again. Now, obviously, if you think about this for a moment, you can see where this could lead. And basically, it could lead to a situation where we are looking at, you could go from 25% tariffs to 100% tariffs. It's a bit like someone insists on having when someone insists on having the last word. You go on and on and on. And obviously, after a while, basically, you stop trading at all. Now, this is an issue now, because the thing is, I've seen a lot of comments about, Canada's got a far higher proportion of its trade and exports, and we're only doing like 2% of our economy with Canada, and you're only doing 2% of our economy with Canada. But, you're doing another chunk with Mexico, another chunk with Europe, another chunk with Japan, and a big chunk with China. And between all of those, it comes to 24% of the US economy. So we're actually potentially, if Trump really means what he says about retaliatory tariffs, because the reality is everyone's going to put on retaliatory tariffs, and then when they get retaliatory tariffs on, they'll put more on. Because the fact is, nobody puts up with this in a trade war. I think really the response to the initial Canadian retaliations seemed to be that it hadn't occurred to the American administration, this current American administration, that there would be any retaliation. But obviously, there was always going to be retaliation, and there will always be retaliation, pretty much. And that leads us to an interesting question, which is that how far does that go? And this is what I was talking about when I was talking about in my last post, that the odds of getting down, doing full bear markets in the US equity markets this year had increased considerably, and actually there is now an increasing probability of a crash. Now, we were seeing a number of interesting things happen at the moment. One of the interesting things is that there's something I've noticed and said, that there's no particularly solid reason for it. But the European markets have been considerably outperforming the American markets. Now, one of the theories I've read for that is that there is a flight of capital from the US, and that money is coming out of the US and it's going into Europe, which is one reason why European markets have been hanging pretty tough so far, and actually haven't really gone down like the American markets have. And there's another thing too. I'm reading a number of accounts that the large numbers, there's been a very large increase in the number of Americans seeking to emigrate to the UK, to Europe, and etc. And there's another thing to think about as well. One of the things I was talking about last year if you saw my last, I'm planning to do another one soon, but if you saw my last, the bigger picture webinar, post on bonds, one of the things I said there, because it was just before the Fed cut interest rates, one of the things I said there was that the Fed had to be very careful because they had to follow the market to a significant degree, because actually, otherwise, it would become obvious that the Fed doesn't actually control interest rates. And what they did was they then cut it by 0.5%, and then the 10-year yield, which effectively is interest rates from the practical terms of mortgages and loans and all that, etc., went up 1%. So it did the opposite of what the Fed did. Now, that just illustrates the point I'd been making in that post, which is that actually it is the bond market that sets interest rates in the US. It is not the Fed, and it's never been the Fed. The Fed has an influence, no doubt, but ultimately it is the bond market. Now, the bond market's liable to get restive the more debt you have, and obviously the Americans have an awful lot of debt, as many countries do. Canada doesn't. I would note, and I think Germany doesn't. But the UK, the US, all of these are running some big numbers. And one of the things I mentioned was that tax policy this year could well generate a bond crisis. Now, what I was talking about on that, and let's just go to the bonds charts for this. Sorry, I'll just start the regular program when I've talked about this. But this is what I just want you to think about the impact on here, because it is worth thinking about, because this is something we're looking at this year. What I was talking about was that we were really, I think when the Fed cut interest rates, we were about here. And obviously we have this flag here, we're about to break up, and then interest rates go up 1%. And they've come down a bit since, and everyone's been talking about that, but I think what we're forming here is a bull flag. We've still got a larger bull flag target, which is a retest of 49.97, and I think we're going to get back there. And what I said was, I thought that would be a very big inflection point, and it could be that we were going to go up to the possible, the arguable, it's not great, but it's not bad, inverted head and shoulder target I've got on TNX in the 8.1 area. What could cause it to go up to 8.1? Well, if the economy is down in the dumps, that's a strike against. If the government is running a huge deficit and seems to have no plan for getting finances under control, so that at some stage the investors in bonds could expect to get their money back, and that's another strike. Also, if the US alienates all the people who own its debt, they may just sell it, putting an awful lot of pressure on bonds down and interest rates up. You see where I'm going with this? If tariffs are, because 24% of the overall population of the overall government, of the overall GDP being imports, basically trade. 24% is quite a lot. If there is a very sizable increase on that, then on tariffs on that, then obviously, effectively, that's a big tax being implemented on buyers. It is effectively an alternative type of sales tax, which is specifically targeted against imports. That's got to be paid, and it's not going to be paid by foreign countries, not like Trump says. No, it's going to be paid by the American consumer. So that's a sizable tax being levied on them. We're also talking about an awful lot of people being sacked by the government. Doge, planning to get through hundreds of thousands. And so we're talking about a situation where the economy could very, very easily fall into recession. And actually, if we go into a full-scale trade war, and that is what will happen if Trump is wrong about people not responding to his tariffs. He was thinking that he'd put the tariffs on and everyone would be, well, you're the US, so I guess whatever you say goes, and that would be the end of it. That's not the way trade wars work. That's not the way trade wars ever worked, really. So what's actually likely to happen is all of them will put on retaliatory tariffs, and then Trump is saying that he will do this. He will then put retaliatory tariffs on those retaliatory tariffs. And I was very interested to see today that Trump was talking about with the Europeans putting retaliatory tariffs on, then Trump was basically saying he'd be putting retaliatory tariffs up against those retaliatory tariffs. And that is a vicious circle potentially we're about to go into. So really, I'm just saying that if Trump really means to stick to his guns on this, then really we could be looking at a recession, we could be looking at a crash, we could be looking at a bond market crisis, and we could be looking at all of those this year. Anyway, all I'm saying is be wary. Because at the moment, really, no damage has been done. I know it seems like the market's dropped a lot, but actually, it hasn't really. It's we've come down a fair amount pretty fast. We haven't even made all the targets for the topping patterns that I posted. Those would basically just eliminate the gains, most of the gains, not all of the gains, most of the gains made on the stock markets in the last 6 months. That's it. That's all it would do. We're potentially looking at going a lot further than that. And really, if things play out as they might do, if Trump really does mean what he says, then we could be basically looking at a sort of artificially recreated COVID crash. Anyway, I'm just mentioning this because you guys need to be aware. This may be what we're looking at. Watch what Trump does on the retaliatory tariffs very carefully, because if he's going to retaliate against every retaliation, then that way we get up to we get up to tariff rates of 100% in no time. And at that stage, a lot of trade comes to a halt. A lot of economic activity, depending on that trade, comes to a halt. And actually, we could be looking at a serious recession. Now, one interesting comment I heard from Trump the other day was that he was just hoping that this recession didn't turn into a depression. And actually, this is kind of how depressions can get started. Anyway, I'm just throwing it out there. I need you guys to be aware, because this year could get really interesting. I was saying it would be an interesting year. I think this could be a lot more interesting than I was expecting it to be. I was already thinking there was a 50% chance of a bond crisis, and that was just on the Trump tax plans, really. But I am thinking that if he really means what he says, and so far he has meant what he said. He talked about all this stuff in the campaign. It's just that people weren't taking it seriously, and they were saying, oh no, it's just a negotiation tactic. Well, so far he's meant it. And the other thing he said, which I was paying particular attention to on the campaign trail, was this thing about retaliatory tariffs on retaliatory tariffs. This could turn a problem into a major nightmare. Equally, it could unite the rest of the free world against the now ex-leader of the free world, the US. All of US main trading partners, all of whom are using US dollars and parking money in US treasuries, they could all just sell the treasuries. The US dollar does not need to be the reserve currency of the world. You really want it to be in the US. You really do. In Britain, we had a reserve currency and stopped having a reserve currency, and we had decades of low growth as we basically repaid all that money we'd been lending out, which means basically other people had lent us for free by holding our currency. This is not a comfortable situation. This could get really rough. So I just wanted you to know. Anyway, in the short term, okay, we're still looking as though we might have a rally, but we've not actually delivered one yet. We've got a potential double bottom here. It tried to break up today, and so far has made absolutely no progress. I've got much more to say about this when I come to, and I'm going to do a post on Friday about this, but probably won't have time tomorrow. But I'm going to talk about lower band rides and where we might be heading here, and why, and what the implications are of not having had a bounce yet. On NQ, we've got a bicycle again. That's made the possible near miss target. I've actually got a really nice looking pattern here, and it's the nicest one I've got on any of the RTH charts. On this pattern, we'd be going back and visiting this trend line resistance yet. So next, and we'll see how that goes. If we see a break up, that will be encouraging, but we've seen encouraging before. Any rally so far, I mean, I was muttering last week that if Trump would just shut up for a week, then we can have a rally. Actually, that's pretty much the case at the moment. We're getting more bad news every damn day. And with more bad news every day, it's very hard to get a rally together. There's still not a bad setup for one. We've got loads of positive diversions, but we're not getting any actual good news. So we'll see. All right, looking at RTY. RTY, we've got a double bottom. It's tried to break up. It's got absolutely nowhere. And we've still got a 60-minute buy signal fixed. Whether it'll deliver anything, you can say. YM, we actually had the 60-minute buy signal fail. So we got a nice looking resistance trend line. We'll see if it develops. DAX and the STX, again, both of them have been doing pretty well. And as I said, the theory I've been seeing for this is that this is actually capital flight from the US. That could explain a lot about what DAX has been doing in the last couple of weeks, because actually the German, DAX is the German index, and the Germans have been in recession pretty much for 2 years. Why on earth is the DAX bouncing up here like this? If it's American money coming out of the US and going into the euros and European indices, that would explain a lot about what I've been seeing on European indices the last few months. As we speak now, I think the FTSE, which is the UK index, is up over 10% from the start of December. That's really impressive, and it's a hell of a lot better. Well, US is coming down into November at the moment, but anyway, we'll see. We got a potential inverted head and shoulders. It's going to take us back up to a retest of the high on DAX here. We're also forming a potential head and shoulders here, although this could just be a double top that is broken down. Either way, it's not making any progress to the downside at the moment. ESTX, wondering about an IHS forming here as well. We've got 60-minute buy signals across the board. In a normal market, we would have seen a rally already. This is not a normal market. All right, let's have a look at the bigger picture charts on this. Okay, SPX. SPX, we still got an RSI 5 buy signal brewing. We have broken down for a double top. We've got a target in the 53.60 to 54.40 area. I'm expecting it to make it. Now, when I was saying that we've just really been just giving back part of the last 6 months. If we make that target, we'll still not be back at the beginning of August low. Actually, we won't even be that close. We'll still need to go down another couple of 100 points to get there. This so far is just a correction. It doesn't need to turn into a major correction or a bear market. But obviously, I think under the circumstances, we've got to seriously consider the possibility that it's going to. Looking at SPX on the hourly chart, we've got an RSI 14 buy signal fixed, and we've still got one of those fixed on the Qs, on Dia, on IWM. None of them have delivered so far, and that's because they're not really getting any breathing room to get anything together. On SPX, don't really have a pattern here, but I do have one on the Qs. Qs, I've got that nice pattern on the NQ chart, and I've got a pretty nice looking pattern on the Qs as well. I'm really liking this. Looking at daily chart, we've got an RSI 5 buy signal fixed here. It hasn't failed, but if it goes down much lower, it might fail. This is the closest to the double top target, and I've got that in about the 456 to 460 area. I'm expecting that to make target. And we will see. If you didn't see it, have a look at the post I did today on Tesla and NVIDIA. I like NVIDIA, but I was basically picking that out as the best and the worst out of the Magnificent Seven. I really like NVIDIA longer term, and I think it's got a great future. And I was saying that after a stiff retracement here, that's probably going to find support and go up. Tesla is in real trouble here. And to be honest, I wasn't saying what I really meant in the post today. I would have been, if it wasn't for the fact I was posting this on Twitter, which of course is owned by Elon Musk, I'd have been frankly less complimentary. Really, what Tesla needs to do now, if their board has a spine, and I think that is open to question, is they need to get rid of Elon now. He is destroying the company. They heavily depend on foreign markets. They're selling something like 60% or 70% of Teslas go out worldwide. A lot of those go to China, where sales are tanking, or they go to Europe, where sales are tanking, or they go to Canada, where sales are tanking, and they're going to Australia, where sales are tanking. And they're not tanking because of the cars. They're tanking because Elon Musk, 2 years ago he was Green Jesus and hero of the climate change movement. An awful lot of the Tesla buyers are you know environmentally conscious people who want to make a difference, and he's lost all of those. I put on a there's been some really bad posters here. I put on one of the pretty much the politest one I could find. But on the Teslas here, and I think they're doing this in the States as well, or so I've heard. A lot of people are basically putting a sticker on their Tesla saying, "I bought this before Elon went crazy." That's the general view in Europe, and actually, it's one of the politer views. I posted one of Kia's advertisements, basically saying, "This is the car I bought after Elon went crazy." So you see, basically, they're taking advantage of the really awful reputation of Musk, and that is not good advertising. It's not a good look for Tesla. And really, if they got rid of him, they'd have a good chance of getting a lot of those people back. But at the moment, in Europe particularly, he's seen as anti-climate, and worse, he's actually seen as anti-democracy and in favor. And the people who he's closest to and admires on the European continent are the neo-Nazi parties, which are rising across the continent. That's not a good look. And obviously, he may well pick up some sales among European neo-Nazis if Tesla still exists in Europe in a couple of years. And obviously, Trump's just bought one. And obviously, he'll probably do pretty well among Republicans. But I do wonder whether that's going to be enough to replace all the sales he's about to lose. And sales figures so far for Tesla are tanking. It's not good. And really, I think of the major companies, of companies with sizable market capitalizations, they're now the poorest performer this year, and that is not an accident. And it's likely to get a lot worse, depending on what happens from here. But at the moment, well, the year's been pretty exciting so far. I'm not seeing any particular reason to think it's going to let up. Okay, let's have a look at Dyer. Dyer, we've now broken down from the double top, and that's got a target at 385. Now, even that doesn't actually get us back all the way to the August first low, but it gets us most of the way there. I'm expecting that to make target 2 at the moment. My concern is that they're going to get down there, and they're just going to keep on trucking. And if we're starting to look at a situation where trade is actually drying up between the US and most of its trade partners, then actually the market may have an awfully long way to go. Okay, on the hourly chart, still got an hourly RSI 14 buy signal, but at the moment that doesn't really mean a lot. Do we have a pattern? Partially, but if we do, then it probably requires Dyer going a bit lower before it's got a decent shot at a bounce. All right, let's have a look at IWM. IWM, we got a possible daily RSI 5 buy signal brewing. We'd gone through the obvious possible bull flag support. This could be a bullish underthrow, but obviously we need to be starting a strong rally from here. I am skeptical. I think we would need a major reversal from the US, from the new administration, and at the moment there's absolutely no sign of that happening. On the hourly chart, we've got an RSI 14 buy signal fixed. On the 15-minute chart, nice looking pattern here, waiting to see if this might break up and waiting to see if the Qs one might break up. But the nicest patterns here are on the 2 weakest ones, which are Dyer and IWM. We'll see how that goes. On DAX, which has been incredibly irrationally strong, this basically powered up and went through the resistance trend line, all of the resistance trend lines. These resistance trend lines, they go back a long way. This resistance trend line that it broke up in early 2024, that went back. That was the main trend line I'd been using for several years. That went all the way back and was a really nice trend line going back to the high in 2007. That is impressive. I had an alternate there, and we went through that late in the year, and we're just off into blue sky ever since. This has been an incredibly strong move. No clear idea of where this might end, although in the short term I am wondering if this is a megaphone and we might be reversing back for a strong move back to megaphone support. Even if we make that, though, that would only get us back to here. Again, A crash? I don't think so. We'd just be giving back a lot of the gains in the last year. Nikkei, this actually has been going down quite a lot, but again, if you look at the bigger picture, this is shot up like a rocket the last few years. In fact, actually, I wrote this on 2020 when the market was crashing, actually. And I was saying, when the downtrends end, then this will likely be a strong buy setup again. And the downtrend ended here. And what's it done from there? It tripled. Now, one, that was a nice call on my part, but more to the point, this has gone up a huge amount over the last 5 years. And really, if we did a 50% retracement, we can get back to 28,000. We are absolutely nowhere near even being a really serious retracement here. I don't have a reversal pattern here. I was thinking we might go back and retest the high. It very much doesn't look as though we're going to do that at the moment. Although, to be honest, if everyone changed their mind and the war's cooled off tomorrow, everything could change. But at the moment, there's no sign of that happening. Okay, let's have a look at DX. DX, I've got a nice-ish support trend line here, which I am wondering about. We could be bottoming out for a rally. We could make it back up to this trend line here at 106.20, but I'm doubtful. I am doubtful, but we will see. It does look as though it needs a bit of a bounce. 60-minute buy signal, however, has delivered very little so far. CB, we've got a possible bull flag forming here. I'm wondering about a retest of the high. There's not. You could see, if you squint, you can see a possible head and shoulders forming. But unfortunately, if you've got a squint, then it probably isn't. So I'm leaning against that, being that I am thinking this looks at the moment a lot like a flag or a triangle forming, and I think this is probably going to result in a retest of this high, and then probably that will be the second high double top, and it will go down. All right, let's have a look at that. Well, actually, let's do CL and NG, and then let's look at those all together. CL, nice looking double bottom. I've been talking about this the last couple of days. Sustained breakup over 68.25. Gets us back up into about 71.5 area, beyond the monthly pivot and beyond this declining resistance. This is a decent looking rally. It could happen. I've got some supporting divergence here. We'll see. I'm still thinking bigger picture. We've got a date with a retest of 63.57. We'll see. NG, we've seen some more retracement today. I've got a high quality target up in the 5.75 to 6.25 area, and I'm leaning strongly towards it making that. So I think likely this is just a buy opportunity, and we'll be heading back up again. We will see. I have also been reading there's going to be a big cold snap at the end of March, and we may see a decent spike up when that happens. GC, I've been saying for days that we were likely to be breaking up, that we seem to be struggling to break up from this pretty obvious bull flag. But we were likely to go back up and retest the high soon. Looks as though we're on the way there. We haven't got much further to go. So after we've done that, could be the second high of a double top, but it may just continue higher. Is there a case for a double top here? Well, yes, there is actually. And SI could make one too. And HG, well, that could be making one at the moment. I've been looking for a retest of this high here, and it's already done it. But let's have a look at the big picture charts. Okay, let's have a look at bonds and the dollar first. On the dollar, tiny bit of positive divergence here, but it's so small I haven't even marked it in. But we do have an hourly buy signal that's fixed. Bigger picture, we've got a move down to this head and shoulder target, which I've got down in the 101.75 area, and then I've got this trendline support here in the 100.5 area. When we look at the much bigger picture, it becomes pretty obvious what I am looking for here, and that is, I was talking about, back in the day, I think, well, when we hit this, which was up in, I think that was in 2022, I saw that trend line be established, and I was talking about a move to come back and test this trend line support in the 96 area. You know, one thing I really hate is that sometimes my lines get moved, and it really, I have to readjust them, and it's really annoying. And wait a second. Yes, and it's done it here. That's really annoying. Okay, sorry. Because he spent some time putting an absolutely perfect trend line together. And, you know, it messed it up. Sometimes even the prices change, but that hasn't happened here. This is the true trend line, and it's lovely. It's really nice. It's perfect. And as I've mentioned on other patterns before, trends like this tend to have friends. The friend in this instance would very likely be this rising megaphone support, and should be, and we should go down and test this. I'm thinking we're going to go down and test that now, and I'm thinking that this looks like a bull flag. Had we gone up to 114.78 retest, then there's a pretty good shot this would have been a double top, and that could have gone a lot lower. As it is, this is a setup which is suggesting that we are going to get down to test this rising support in the 96 area, and then we're going to return back to the highs. What will be the basis for that? Who can say? That's just what the patterns say, but the patterns do often deliver on these things. So we will see. All right. Okay, great. So let's have a look. It's just annoying how these lines move over time. Okay, weekly. No current divergence, and obviously that's the situation on the daily. But I think the bigger picture is I'm expecting this to break down, and I'm expecting this was A, B, C. C, the target is 96. I think it's got a very good chance of making it. Okay, TNX, as I mentioned, there's a potential IHS which is broken up, and actually I've got the same thing on TYX, which is the yield on the 30-year bond. In fact, it's a bit better. So I am wondering about a move considerably higher this year. That really could happen. Inflation will put pressure up on interest rates. It will also hurt the confidence in the bond market. The big beautiful bill the Republicans are putting together to basically, kick the can for fiscal responsibility down the road and put in a whole load of extra. Basically, do use a lot of the money, it seems, from tariffs to basically tax the working people in America and give it all to Trump's rich friends. So is this a plan for Republicans ever being in power again? Not particularly. Is it a plan which will inspire the bond market with confidence? No. The American debt's really got up to a stage where getting some control over the budget has become very urgent. If Trump is heading firmly in the opposite direction, it doesn't matter how obedient his Republican Party is. The bond market likely won't wear it. And this is why I was talking about a possible bond crisis this year. That bond crisis could send interest rates up to 8%. And if Trump is complaining about having to roll over treasuries at 4%, wait till he has to do it at 8. Is it possible it can get up to 8? Sure it can. Sure it can. I said when we got to this low here that we were likely going to be in a bear market on bonds, i.e. a bull market on bond yields that would last between 10 and 20 years. We're 5 years in. And how much have we retraced of this huge bear market in bond yields and bull market in bonds, of course? We've currently retraced about 30%. That's it. 50%, actually, if we went back to 81.2, that would be a 50% retracement of this huge move down. And really, that's the minimum I would expect to make in this bear market. And I think it might make considerably more. It used to be, a lot of people don't remember it nowadays, but it used to be that interest rates were like, between 5 and 10%. It's, at the top of this, they reached 16. It's, frankly, if current policies are not changed, we could reach 16 again sooner than we were expecting. But actually, in this case, it was all down to inflation. And actually, if we start getting 100% tariffs on everything, well, inflation could rise a lot. And there's an awful lot of things America has to buy in because actually it can't do them. One of the most insane ones I've seen is this thing about bringing aluminium manufacturing back. There's a very good reason why aluminium manufacturing isn't based in America. And that's because, really, the people who make an awful lot of aluminium, like Iceland, basically a small town of a country, and Canada, what these places have that other places don't have is large sources of cheap geothermal energy. And that's what they use to make aluminium, which costs a fortune in electricity to make. If you have an area with high electricity prices, you can't use it. Equally, where you have it, it tends to put rather a strain on the grid. And I think a lot of US grids would need to be upgraded before they could handle an aluminium plant, which couldn't in any case at the price they would be selling electricity to it, make it economically. So actually the tariffs on aluminium are particularly insane and ill-informed, because this is something that actually America cannot make competitively just because it doesn't have large geothermal sources of energy. It's a big country, but they're in Canada. And whatever Trump thinks, Canada does not want to be part of the US, and the more he puts pressure on them, the less they want to be. All right, looking at the daily chart on TNX, we've got an RSI 5 buy signal fix. I'm expecting to see some upside on this. I'm watching the daily middle band at 43.58 with particular interest. We might need to come back and retest this low. I was talking about it being a very possible flag forming on ZB. This could be a bear flag forming on TNX, retest that low, and then go. But sooner or later, we've got a date with 49.97, and the more I hear Trump talk about the tariffs and deliver on his campaign promises on tariffs, the more I'm thinking that eventually we could hit 8% this year. I mean, obviously, that would be very bad news for the economy. It'd be very bad news for everyone, but it's coming onto the table. All right, we've got this nice looking little breakaway gap here, and I'm also looking for that to get filled, but I'm not sure it's going to get filled before we go and retest the low on TNX. We will see. Looking at oil, we have a really nice falling wedge here, and if we did actually test support on it, we'd actually get back to the low. We've got a lot of space in the wedge. I've got resistance up in about the 77 area. I'm watching declining resistance, which I've got in the 69 area, and we don't have a buy signal here. And I note that, because obviously we often don't have a buy signal, and I don't mention it at all, but I note it because we have got an RSI 5 buy signal on CL. We don't have it on the continuous. We do have it on CL directly. I haven't looked to see if it's on the next month, but I'm taking this buy signal seriously, and I'm taking the double bottom we've got seriously, and it's a nice double bottom, and it's a nice buy signal. I'm thinking at the very least it's probably going to see a break up over 81, a 68.1, and we could see a serious attempt to make the target. All right, natural gas, keeping an open mind. Could we come down? Always. We've got a possible RSI 5 sell signal brewing on the monthly, but it doesn't really mean anything till it fixes, and to be honest, these things can take a while. What we do have is, a monthly buy or sell signal can sometimes take years to play out. What we do have is a really nice looking double bottom that is broken up with a target in the 575 to 625 area, and I'm expecting that to make target. All right, let's have a look at metals. Okay, GC. RSI 14 sell signal fixed. We had one on the RSI 5 as well, and that is now made target. I was suggesting this was a flag, and it looks like a flag. Now, we could actually come down and do another low within that flag, but we got pretty close to the retest the high today, and I think we're probably going to manage that. Bigger picture, I am wondering, looking at the silver chart, and one of the reasons I'm wondering is I've got this nice trend line across the top here. We could be topping out here. Could see a double bottom and then a large retrace while the dollar is going down. Well, I'm wondering about it. But I would say the support is at the 200 DMA. I've got that up in the, oh no, that's the 50. Yeah, that's 50 DMA. That's where the clear support is at the moment. Watching that. If we see a break below that, then I'll be wondering about weakness. But if we are going to see weakness, I'd like to see a test of 35.07 first, set up a double top, and then we would see where it went from there. Looking at the SI chart, looks pretty much the same. Waiting to see, but this looked like a bull flag. It's broken up, and I'm expecting to see that retest. On SI, that retest would be at 35.8. Now, I was asked the question this morning about, is there any sign that palladium and platinum have bottomed? You can see I'm switching over some of the charts here. That's partially because stock charts is been steadily reducing over the last few years its coverage of direct futures contracts, and partially it's because I've been moving on to the continuous for the longer term charts, so I'm kind of combining the two here. But the reason I switched over palladium was when I switched over palladium into the new contract last week, they'd stopped covering it. So, but one thing you can see, looking, I drew a fairly broad brush here, so I've got this going back 4 years. There is a double bottom or an inverted head and shoulders forming here. If it's an inverted head and shoulders, we could break up at any time. If it's a double bottom, then there is an argument for seeing another retest of the low. because the first double bottom broke up and didn't make target. There's an argument for retesting the low before it goes higher, so that's not hugely encouraging. The other thing I would mention is that we've been seeing now, I mean, how long has this been going on gold? We've been rising since 2016. We've had a really strong move up since 2022. What's that? What have we seen on palladium? Nothing. Actually, it's come down a lot since 2022, and actually it's made it all the way down from a high of 34.25 in 2022 down to 950. Clearly, it is not dancing to the same drum as gold. And we've not really been seeing it respond this year when gold's gone up. Maybe it's just not going to. I would say that palladium and platinum and silver, all of which have considerably underperformed gold, are all of course industrial metals. And in addition to our concerns about the current government policy in the US, we've also got a situation where China is in an awful lot of trouble, has borrowed itself up the hill. And I'm reading serious articles suggesting that they may invade somewhere just to try and distract people from the home economy. It's not good. You have a number of, well, altogether, it's likely to be an interesting year. But we will see. On platinum, no sign of this bottoming out either. I'm wondering about a retest of this low here at 907.40. Looking at copper, now copper, this is actually pretty close to the all-time high, which was done at 420, I think, at the start of 2024. I'm wondering if we're coming back up for a retest of that. I am wondering if that might be the second high, third high, really, of a large nested double top. If we're going to see a sizable economic contraction, that could happen. Are we going to see a sizable economic contraction? Well, I think that can happen too. It depends. People can be very, very healthy, and if they pick up a gun and shoot themselves in the head, they'll still be dead. And what I'm saying is that economic suicide by trading partner, you don't read a lot about it in books, but nonetheless, I think we might be about to see whether it can be done. But we'll see how that goes. But it's a worrying world we're living in. It's getting more worrying by the day. On the daily chart, we've got an RSI 14 sell signal fixed on HG, and we've got a possible double top there already. GDX, we've got a weak RSI 14 sell signal fixed, but I think really we're on track to go back and retest this high at 43.71. A GDXJ, retest the high at 54.18, I think. And really, I'm looking for that sooner rather than later. When we had these sell signals fixed, we had RSI 14 and RSI 5 sell signals fixed at the same time. Of those two, the one I really pay attention to is the RSI 5. We often find that we see a big bounce after that is reached. And sometimes the RSI 14 one doesn't make the target at all, or just plays out later. All right, great. In that case, let's have a look at the other commodities. Now, coffee. I'm watching this rising support trend line. I've got it at in the 3.82 area. I'm wondering about a possible flag forming here. This would be A, B, C. So I'm wondering if it might come down and retrace to 3.5. I would say that we were reading a lot a few months ago, which I was talking about, and it took a while. We were forming this flag. I think we were doing it, and people were talking about, there were going to be shortages of coffee next year, and I was expecting to go up, We were forming this flag, and then boom, it went. Now, what I would say is that by historical standards, we're at very, very high levels, nosebleed levels, and it may be that we're going to top out here and come down. I'd love to see a retest of the high before that happened. I would love to see a bull flag forming here, then a retest of the high, and then very possibly a second high of a double top, and then we come down and make a decent-looking retracement, which would probably be looking for about the 3 area. That would be getting us back into more normal territory. On sugar, I was still wondering about a full retest of this low here at 17.52. Haven't quite seen that yet. We had a couple of decent attempts. I'm thinking we may need to do that before we go up, but we may got a shot at making a very decent low there. On cocoa, we started off with it looking like a flag here. It no longer looks like a flag. I am wondering about a larger double top. I'm going to be I'm working up all the weekly charts on these and then the monthly charts, and I'm going to start profiling these and having a look in depth at each one. We've got possible RSI 5 and RSI 14 buy signals brewing here. On wheat, we've got a nice looking double bottom here. It's got not getting close to breaking up here, but I'm wondering if this might be a sizable reversal in progress. If so, a sustained breakup over 621.60 would have a target in about the 710 area. Looking at corn, wondering about a reversal here. We don't have an obvious reversal pattern here, but we did have a nice looking double top, and we made the full target. So I'm thinking it could go up directly from here. On soy, wondering about a retest of this low, setting up a double bottom. We had our head and shoulders, no, it double top again, and we made the target. And there's no particular reason for it to go lower, but obviously if everyone stops buying everything, then obviously these might go down as well. Cotton, we had a really nice opportunity. Sorry, they stopped doing the cotton chart last week as well. I'm not too happy with the quality of this one, which is the continuous chart. But be that as it may, we had a really good opportunity to make a double bottom when we got down to here, and then we came down to here. So it's a less good opportunity at the moment. We might still be forming a reversal pattern, but we will see how it goes. On lumber, we've got a move up here over the obvious trendline resistance. I'm wondering if we might be topping out here, but if we are, I'd quite like to see a retest of this high here at 677.08 first, so we'll see. Anyway, I've been musing a bit about current events and so on today, but I was thinking about a lot about this last year, and I was looking at Trump on the cab train control, and I was trying to say last year how interesting this year might be, and to be honest, I wasn't thinking it would be as interesting as this. And I wasn't really thinking it was possible it would be as interesting as this. Right now, we're really, really looking very interesting in the worst possible way. And I'm watching like a hawk to see what happens with this retaliations on retaliations thing, which Trump was very much talking about last year and has talked about since. If he means it, things can get really ugly really fast. So watch out for that, and you watch it as well. I'm planning to do a post talking about this and wherever we are on SPX on Friday, and I will catch you guys on Sunday night. All right, cheers.